upstate New York, Cornell University, where we have just celebrated the graduation of the class of 2022, and we congratulate our new graduates. Today, also, we are having the last webinar for this academic year organized by the Emerging Markets Institute in collaboration with Cornell. So my name is Lourdes Casanova, and I'm a senior lecturer and also the Gail and Rob Cañizares director of the Emerging Markets Institute. And the webinar is the dynamics of distress and debt in emerging markets. And we look at Sri Lanka's struggling economy. On April 12th, the Sri Lankan Ministry of Finance announced that it would stop servicing its foreign debt. It worked with, while it was working with creditors to restructure these obligations. This is the first time since the independence of the country in which Sri Lanka defaults. There is also a couple of things that are specific of this crisis. One is the current creditors, which include China, the biggest creditor, and Japan, of approximately half of the 35 billion debt is owned by private bondholders, including BlackRock, for instance. The IMF will play an important role in this restructuring, but already the government of Sri Lanka is asking proposals for financial of this process. Some could argue that it all started with the pandemic. The pandemic stopped tourism, and tourism is almost 6% of Sri Lanka's GDP and also a source of foreign currency. There is also a lack of economic activity, high inflation. In Sri Lanka, the inflation is at 30%. Foreign reserves are disappearing very fast. Supply chains not working, geopolitical turmoil. Sri Lanka had just a new prime minister. And also, Sri Lanka crisis poses imminent concerns for both foreign investors and, what is sad, for Sri Lankan citizens. And possibly, we'll talk about it, domino effects for the global economy. As we saw in the Argentine crisis of 2001 and 2002, Sri Lanka Central Bank has restricted the amount of foreign currency citizens can hold to US dollars 10,000. So a lot of difficulties for Sri Lankans right now that are suffering the consequences of this major crisis. To understand better the situation, we have two great experts, Dean Andrew Karolyi and Dr. Mark Mobius. We'll start with Dean Andrew Karolyi, who is the Charles Field Knight Dean of the Cornell S.C. Johnson College of Business, also a professor of finance and holder of the Harold Wildman Jr. Distinguished Professorship and a professor of economics in Cornell College of Science. Professor Karolyi is a scholar in the area of investment management with a specialization in the study of international financial markets. He has also published extensively in journals like Journal of Finance, Journal of Financial Economics, and Review of Financial Studies, and also several books, and is featured in media, both print and electronic, Wall Street Journal, Financial Times, Economist, Washington Post, Forbes Business Week, and CNBC. He has also completed a 4-year term as executive editor of the Review of Financial Studies. He's the president-elect program chair of the Western Financial Association and other major responsibilities, and has a PhD from the Graduate School of Business at the University of Chicago. We will start with you, Dean Andrew Karolyi. So in your Oxford University Press book, Cracking the Emerging Markets Enigma, you discuss what has been perceived as an emerging market and how Sri Lanka has been one of them. How do you see the country and also the very latest, very difficult economic situation? Dean Karolyi, the floor is yours.
Thank you, Lourdes. Good morning, good afternoon, good evening to everyone around the world listening in on this incredibly important webinar on this incredibly timely topic. I'm really grateful to you, Lourdes, if I can, just to start things off, for your stewardship and leadership of our Emerging Markets Institute. It's through you and the incredible fellows that support the Institute that we are able to bring these topics forward. And it was wonderful to celebrate with the graduating EMI fellows on Friday. It was just wonderful and heartwarming. And can I just say how thrilled I am to share the stage here with you and Mark Mobius, somebody who I've admired for decades as a leader in the industry and just shaping the whole concept of emerging markets. So it's just wonderful to have to be together with you talking about this issue. So you're absolutely right. I wrote this book in 2015, and it's gone through several editions since, focusing on essentially defining what emerging markets are from the scholarly perspective. It talks about the history of the concept going back to the late 1970s, where Mark Mobius and many of his colleagues were there establishing the concept and defining those terms. But it basically takes it on from a scholarly perspective. Let's call it the science of emerging markets, and brings to bear, I would say, I think the distinguishing characteristic of the book's enterprise was to take an holistic, all-encompassing, comprehensive perspective on what it means to be an emerging market, trying to broaden beyond the concept of what a lot of commercial vendors out there do, and certainly the IMF and the World Bank, which is often very much focused on the level of economic development, like say GDP per capita. And it is unashamedly a perspective that comes from an investor's perspective and looking at these markets from the outside. So this book took this on. It juxtaposed 33 what we would call traditionally defined emerging markets, and really hones in on what we are talking about here, which are the fundamentals in these markets, sort of the institutional infrastructure underlying these markets, and not just whether it's growing or not just whether the GDP is high or low, but to actually dig down from the investor's perspective on these sort of institutional constraints, talk about the market's capacity relative to the size of the economy, the operational efficiencies from the investor's perspective, accessibility restrictions for foreign investors, both de jure as well as de facto kinds of blocks and restrictions that are imposed on them. And then it gets into softer constraints, like, for example, governance systems in these countries around the world. A lot of the science in the last 20 years is focused on governance systems in these countries, limits to legal protections in the event of dispute, the need for dispute resolution, and of course, the importance of political economic turmoil, political economic uncertainty in these countries. And sort of it takes a sort of a multi-dimensional holistic perspective on these countries. So how does Sri Lanka shape up in the last 20 years according to these metrics? Well, it turns out, according to my framework, Sri Lanka would typically fall somewhere in the middle of the pack among the traditional 33 traditionally defined emerging markets. In terms of sort of the overall score, if you like, it's actually remained steadily in the middle of the pack for the past 20 years. If you actually look at some of the commercial vendors out there that have, advocate for their own indices, some would have put them into the frontier class as opposed to the emerging class. The IMF itself classifies it as emerging using traditional definitions because, again, it focuses on GDP per capita. Now, what's really interesting to me, if I look at the book and how it's classified, there's the book right there, how it's classified historically, Sri Lanka, is that its actual market capacity relative to most of the emerging markets is actually quite resilient. This is looking at, for example, the market capitalization relative to the GDP, the amount of domestic credit that's outstanding relative to the GDP. And within the equity space, the turnover, the number of new listings coming to market, it actually showed itself to be quite solid and healthy from an outsider's perspective, looking in and comparing across emerging markets. Where it seems to have been held back on this is in terms of the second score called what I call operational inefficiencies. This is more about the illiquidity in the underlying systems. There are some important restrictions on certain kinds of trading, for example, short sale capacity that are in some emerging markets, not in Sri Lanka. And there are some agencies that have actually evaluated the payment systems, so sort of the robustness and the risk management systems underlying the payment systems. Those, in the historical sense, have typically been what have held Sri Lanka back. It actually scores relatively well compared to most emerging markets in terms of foreign accessibility restrictions, both the de facto and de jure measures. The de jure measures here are talking about registration requirements for foreign investors entering into the market, ownership restrictions, repatriation of profits, cap limits, currency convertibility restrictions. It actually scores relative to its peers reasonably well. It actually scores reasonably well on corporate governance systems. Here we look at a number of different metrics, like large blockholder controls, the fraction of shares in their large publicly listed companies that are closely held by large dominant controlling interess, and actually the actual accounting and disclosure standards that prevail in these markets. It actually, relative to its peers, scores quite well on that dimension. I would also add that in the relative sense, it's probably in the top third among 33 traditional emerging markets in terms of the rigorous legal protections that are in place for minority investors. Here we're looking at, for example, the quality of the credit registry and the credit information repositories that are there. The World Bank has scores on director liabilities and shareholder constraints, the number of procedures, and, for example, time to resolution in enforcing contracts. From a legal standpoint, legal protections for investors, minority shareholders in many of the companies there, it actually scores well. So I don't know if you're keeping track here, but the place where it scores relatively less well is in terms of its political instability. These are what we would call political constraints on policy change. Those are relatively weak. We look at a whole host of different measures, the Polity 4 Democracy Index scores. It also scores relatively poorly in terms of the concentratedness and limited fractionalization of their political institutions. And some of the World Bank scores on voice and accountability and control of corruption are also relatively poor scores. So when you size all this up, Lourdes, it seems to me that market capacity, fine. Operational inefficiencies, relatively weak. Openness to foreign investors, fine. Governance systems in place, fine. Legal protections for minority investors that enter into Sri Lanka, fine. Political instability is where there's a warning system, a low score, and cautions. And so now you sit there and go, okay, thank you for that framework. What about where we are now? Well, you sized it up very well, Lourdes. The newest developments. We've got fuel shortages, rising inflation, surging food prices. These are global phenomena that are clearly happening. Geopolitical uncertainty. I don't know if we can ascribe that to the pandemic, but certainly the first through, it's not unreasonable to make some sort of causal inference on that front. It's definitely worrying to see the anti-government protests and military enforced curfews that are trying to handle sort of the social impact of these economic pain. There's no question that the default on $1.25 billion in sovereign bonds is, an affirmation. I don't like to use these words. The Eurasia Group has called Sri Lanka out as a failed state. I don't use those words myself, but a lot of it has to do with the depletion of the foreign currency reserves. And I'm not sure that the Eurasia Group is wrong to be looking at the political concentratedness of decision-making power of the Rajapaksa family in the governance system of this country to kind of raise concerns. President Gotabaya, the former president and former PM Mahinda, the former finance minister Basil. It ran its course for about 15 years now since that team came into power in Sri Lanka, and in that, of course, was following on about a 26-year civil war. There's no question that the new Prime Minister Ranil Wickremesinghe is both PM and finance minister. He has his hands full, and I know we'll get into a lot of this. I would say to you in conclusion, before I hand it back to Mark, I'm looking forward to Mark's comments as well. It clearly feels like what we're seeing now has some very much ligature and connective tissue to some of those fundamental institutional problems that were identified in my book and by many others in Sri Lanka. So thank you.
Thank you very much, Dean Karolyi, for setting the stage. So Sri Lanka, a typical emerging market, but this time, the first time they default in their 70 years history since independence. And as you are saying, as you were predicting in your book, a lot of political instability causing even adding more to the turmoil. Yeah. So the second expert we have is Dr. Mark Mobius, that is seen by many as the founder of the emerging markets asset class and one of the most successful and influential managers in the last 30 years. And in May 2018, with two former colleagues, he launched Mobius Capital Partners, that they do active investment approach with an emphasis on improving governance standards in emerging and frontier market companies. He was for 30 years at Franklin Templeton Investments, and most recently as executive chairman of the Templeton Emerging Markets Group. And the group expanded assets under management from 100 million under his tenure to 40 billion and launched a number of funds in all emerging markets. He has a PhD from MIT, and he was also a member of a number of companies, OMV, Petrom in Romania, and also was a director of Lukoil, the Russian company, and is recognized as an expert also, is very often in the news, like Dean Karolyi, Bloomberg, CNBC, and Fox, and has had many awards, Lifetime Achievement Award in Asset Management in 2017 by the Global Investor magazine, and also one of the 50 most influential people in 2011 by Bloomberg Markets magazine. So you, Dr. Mobius, have recently visited Sri Lanka, have made a presentation on the subject. How do you see the situation and the way out of the current economic crisis in Sri Lanka, and how other emerging markets may be affected? And if you could compare, are we in the beginning of a debt crisis like the 80s in Latin America? We hope not. Dr. Mobius, the floor is yours.
Thank you very much. It's a very nice introduction. I really appreciate it. And it's an honor to be with Andrew on this session because, Andrew, your book is really top-notch in terms of describing what's happening. And I'm glad to see that you have new editions coming out, because I know there's a need to update all the time in this emerging market scenario. But the other point I want to make is that your view and your description of what's happening in Sri Lanka is spot on. It really gives a very good overview of where we are. You know, the so-called twin deficits, the deficit in the government finances and the foreign exchange deficit is really what's really very, very serious in this country. But I would like to give you a more personal view, because I've been going to Sri Lanka to invest for, let's see, it's over 20 years now. So I'm very, very enamored with Sri Lanka, the people, the country. It's just an incredible place. I really love going there. I love, even under circumstances like this. And I was there 5 weeks ago. I was in Colombo. I went down to Bentota. I know the John Keel's company, which, as you know, is one of the big companies on the exchange, and they have a number of resorts. So I went to the Bentota resort that they have on the coast down south, and then I also visited the big fortress town there in the south, Gaul. So I got a pretty good feeling, and I saw that the hotel was about 70% capacity. A lot of Indian tourists and a lot of Russian tourists, by the way. I guess a lot of Russians are escaping to Sri Lanka. So the tourism was not bad, but not great. There's no question about that, because people, when they read the headlines of demonstrations, so they get frightened. But in the car going down south to Gaul, I noticed a demonstration, a crowd of people holding signs. One of them was Gota, go home, Gotabaya, the president, go home. But they were very well organized and very peaceful. There wasn't any violence that I could see. And by the way, I saw the same sort of demonstration, larger, of course, in Colombo. And again, they were very controlled and organized. So I was, again, it confirmed my feeling about the Sri Lankans as being quite polite people, good people generally. Of course, you're going to get some violence, but I think generally speaking, it's going to be good on that front, provided, of course, that things change. Now, big question is why was I going to Sri Lanka that time? Well, the reason is that 4 years ago, I purchased an apartment in a new development that was being built by John Keel's group. It's right in the center of Colombo, overlooking the bay. And by the way, if you haven't been to Colombo recently, you'll notice there's a big, beautiful container port built by the Chinese. And while they were building container port, they started filling the land. They taking earth from the sea and filling in and creating an island, which they are developing into a very modern, probably modern island. I saw the plans look very, very good. So the Chinese are very much involved in what's happening in Sri Lanka. And of course, as you mentioned, what their technique is to take control of an asset if the debts are not paid, which in my view is not a very bad thing, because they usually can run these assets very well. And when they turn them back to the government, they'd probably be in pretty good shape. But anyway, that's another question. So I was there to get the keys to my apartment, my new apartment. And by the way, just this morning, I met another investor from Singapore who's here in Dubai. And he said he also had bought an apartment there, actually 2 apartments in the same development. And of course, if you look at it from the outside and say, what a foolish thing, aren't you going to be losing your shirt there? No, because property prices actually are going up in Sri Lanka, because those people with money want to turn it into assets of some way. So I'm very comfortable with having an asset there, a property asset, because I know I'm not going to lose a lot of money, and probably there'll be some appreciation in value. And the interesting thing is that in furnishing the apartment, I was shocked at how cheap it is to fully furnish this 2-bedroom apartment, because again, in repeat terms, things are quite cheap. So as I always say, any crisis has opportunities. In other words, there's a big debt crisis. Anybody's holding the debt have lost, 40, 50% of their money. But people who have had assets probably are not doing that poorly. And I believe that in view of the very strategic importance of Sri Lanka in the Indian Ocean, in the pathway from the Middle East and from Europe to Asia, the Chinese certainly are very interested in that strategic asset. And the Indians, of course, are very interested, and the Americans are interested. So in the context of that kind of political scenario, I believe that support will be given to Sri Lanka under the right conditions, of course. There have to be changes, political changes, of course. But I believe that there will be considerable amount of support. And in the context of global debt, the amounts that we're talking about are not large. So I'm quite optimistic of what's happening, but we still have to go through a lot of pain. What kind of pain do we have to go through? First of all, taxes. As you know, Rajapaksa family, in order to get reelected, promised to lower taxes. And as a result, after they got elected, they lowered taxes dramatically. In fact, they went from 1.5 million taxpayers to less than 500,000 taxpayers. So the government finances are a mess. That's one of the things they're going to have to do. They have to raise taxes. And the second thing they have to do is start importing fertilizer, because another thing the government did was to restrict the importation of fertilizer, which of course hit food production in a big way. That has to change. Of course, then the next question, where do you get foreign exchange to import the fertilizer? So all of these things have to be worked out. But I believe that within the next 2 or 3 years, they will be on their feet again, provided that there's some political change taking place, and provided that the donors, the people who come to the table for more debt, will be generous and aggressive in giving Sri Lanka the kind of help that they need. So that's a personal view that I have, and I know from an official point of view, I'm sure the IMF wants to have some kind of reciprocity. Reciprocity is a very dirty word for many of the people who get debt from the IMF. They don't like reciprocity, but that has to take place. There have to be changes taking place in Sri Lanka to bring the changes that have to be made in order to really reform the economy. And of course, at the end of the day, it's all about tourism, because tourism is the big foreign exchange earner. And I believe turning around the tourism will be rather quick, because nowadays, with the rupee having declined so dramatically against the US dollar, it'll be very inexpensive to visit Sri Lanka. And they have wonderful hospitality, wonderful hotels. So that shouldn't be a problem. In my hotel, by the way, a few nights, not in Colombo, I stayed at the Cinnamon Hotel in Colombo, which is owned by the John Kills Group, but the Cinnamon Hotel in Bentota, a few times the electricity went out, but they have generators, and they were able to get fuel for the generators. But generally speaking, I think tourism will return, and that will not begin to bring in foreign exchange again. So those are general comments that I have, and be happy to take any questions.
Thank you very much, Dr. Mobius. I'm very glad to hear that you believe that in 2-3 years the situation will turn around. So both of you, Dean Karolyi and you, have been positive. I've been teaching about emerging markets for many, many years now, and I remember the debt crisis in the 80s. I started teaching about emerging markets right after, and it took Latin America till 2004 to recover the GDP per capita they had in 1982, and poverty levels took even longer to recover. So the debt crisis in Latin America had devastating effects. And remembering that, so many of us who teach about emerging markets are worried that will this start, and both of you are relatively positive and saying this will be solved in 2-3 years. So we are hoping that you are right. So let me turn now to both, actually, for the webinar, both EMI fellows, Bill Montgomery and Ravin Nanda, who have been behind pushing us to bring these very important subjects to the fore in discussions like this one. So Bill is a full-time MBA student, and he was before, so he knows also the subject very well, because he was an accredited diplomat with the United States Foreign Service, predominantly in South Asia and Middle Eastern affairs. So he covered a variety of political, economic, and security issues in Afghanistan, Sri Lanka, and other places. And before that, he was a commissioned officer in the U.S. Army with a deployment in Afghanistan and supporting special operations. And this summer, completely different career, is joining M&A advisory practice at Evercore. So very happy to have here with you, Bill. And Rabin is, again, an EMI fellow, undergraduate, and is studying economics in the College of Arts and Science in Cornell, and is also joining investment banking this summer. Both of them will be very, very busy at Lazard. And he also is a member of the Cornell Investment Banking Club, Cayuga Capital, also the museum, also interested in art, and Ithaca Global Shapers, and is originally from the Greater Boston area. So thank you both. So I'll turn the floor to Bill, who will be handling some of the questions that we have prepared and also from the audience.
Well, first, I just want to say thank you to Dean Karolyi, Dr. Mobius, and Dr. Casanova for taking the time today to talk about this really interesting, complex, and troubling issue of Sri Lankan debt. Going back to what you were saying, Dr. Mobius, about IMF intervention, they're certainly going to require austerity measures as part of future Sri Lankan government spending. So my question here is, how deep are these measures likely to go? And what happens if the Sri Lankan government lacks the political support to implement the full extent of this requirement?
I believe that the measures will go pretty deep. I think the situation is so desperate and people are demanding on the street changes. The government will just have to make the changes necessary and demanded by the IMF. Of course, they'll hesitate, they'll argue, there'll be negotiations, but at the end of the day, they will have to knuckle down and really make the changes necessary. And I believe other donors like India will also require these changes. So it's not a matter of going from one to the other. And as I mentioned, look, you're talking about India, the US, and China. As I said, China will most likely say, okay, let me take over some assets in exchange for the debt that we gave you. And by the way, one of the issues is that the Chinese apparently signed confidentiality agreements when they made their loans, which do not allow the Sri Lankan government to reveal exactly what the Chinese have lent. So that's another issue that I think the IMF and other donors are going to have to address. But I do think that the measures demanded, for example, higher taxes, which, by the way, are not going to affect the 20-odd million people in the country so much, except with the value added. But as I mentioned, there are only 500,000 taxpayers now. It should really be 1.2, 1.3 million. That wouldn't be a big deal. And then government finances, of course, will have to change. But the immediate emergency needs to import fertilizer and to import certain food items and oil, I think, will be forthcoming. And then after that, you'll see the changes taking place in the government. I think at the end of the day, the Rajapaksa family will have to depart. They will have to be out of the picture. And I think that is something that the people are demanding on the streets. And I think that's going to take place at the end of the day. But of course, that may take time.
Thank you so much, Dr. Mobius. And again, Dr. Mobius, Dean Karolyi, and Dr. Casanova, thank you so much for joining us today. Our next question is from Renee Bonamy. And she's wondering, what are some of the strategies that Sri Lanka can evaluate to get funds toward restructuring debt and getting back on track economically?
Well, I think right off the bat, I think what we will have is the Reserve Bank in Sri Lanka in support of the government, who will be the front lines in negotiations with the Chinese, with the Indians, and as well as with the IMF and World Bank, they're going to reach out to their partners in the reserve bank, the central banking community. What they clearly need, they are clearly sapped of foreign currency reserves, and they need to open up their swap lines with their counterparts to make sure that there's a free flow, draw on the trust of that system, of the brotherhood and sisterhood of the central bank community, to make sure that they're in support, to make sure that they can draw on those swap lines to be able to support and continue steady continuation of their trade flows and their capital flows. That's going to be what is going to help them be resilient through this turmoil that we will be expecting, the social and political turmoil that we'll be expecting. So I think that's for sure one thing that we should anticipate, Ravan, and probably already seeing it. I don't know, Mark, if you want to add something.
No, I think that's a very good point. That it's very important. They have to liberalize the foreign exchange situation as soon as possible. I realize that their backs against the wall, but at the end of the day, if you want to bring in foreign exchange, you got to allow it out again, because the first thing people will ask, okay, I'll bring in foreign exchange, but can I get it out? And I must say, I have an account there in both the rupees and dollars, and I haven't tried to get it out, but I'm sure there've been a lot of restrictions. So I think your point is well taken.
Yeah, I mean, when you see a currency drop as precipitously within a month as we've seen the rupee, and it's what is halved in value relative to the U.S. dollar, you know that there's stressors there that they need release on those stressors, and this is clearly one proactive action that can be taken and is already probably well underway. By the way, to follow on Mark's point, Ravan, the undoubtedly the restructuring conversations that will be had with the IMF and with some of these other sovereign partners, and not to mention the private investors, will, through the collective action clauses, will undoubtedly have pre-specified conditions that relate to the free flow of these currencies, free flow of the capital. That's going to be really important. Everybody's going to see that as the lifeline out of this current crisis.
Yeah, I think there are going to be a number of people, who will say, look, the rupee has declined so much. What a great opportunity. I can have to buy rupee and then buy assets in Sri Lanka. That's the kind of thing that you're talking about. I think is what is needed. Yeah.
So as a quick follow-up, I mean, it really seems as though there are some viable paths to help Sri Lanka emerge from this and emerge well. But there certainly are some variables. And so in that spirit, from, The Economist has written foreign policy, some of the other academic literature kind of supposes that both Japan and China are going to have to agree to discounted payments as any part of the IMF agreeing to provide support. So what are some potential scenarios that could emerge in the event that Japan and or China refuse to take these haircuts on the debt and then therefore impose some challenges to the restructuring process?
Shall I start? Just
Yeah,
to start
please.
out,
Yeah.
I would say that, one of the things we didn't mention is the Asian Development Bank. I'm wondering what they are doing, because they got to figure into this some ways, because the Asian Development Bank is run by a Japanese bureaucrat, and they tend to be very, 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 very conservative. Let's put it that way. So I don't know whether any help is coming from that end, but I think your point is very well taken. The Japanese have to be involved. And by the way, other Asian countries are also, in the game as well, because Sri Lanka is part of Asia and such an important part of what's happening in Asia. So I think, there'll be probably talks with the Japanese and others who are capable of coming up with some help in that regard.
Yeah, can I add to that, Mark? Yeah, I'm sorry,
Yeah.
I cut you off. I was going to say another critical player that wouldn't have been there 10 years ago, but is now clearly, undoubtedly has a seat at the table, is the Asia Infrastructure Investment Bank, which is the Chinese-backed regional player. And this is, of course, an important player in underwriting a lot of the China's Belt and Road Initiative. And there's a lot of talk with respect to Sri Lanka's dependence on that source of funding. So I don't know if that's what your question is, Bill, about the political dynamics here, but you've got ADB, you've got IMF, World Bank, and you've got this AIIB that are all sort of in the mix, all sitting at the table, not to mention the private actors that are, and they're not all singing from the same song sheet with respect to what kind of expectations, what kind of conditions that may be provisioned for towards let's call it an orderly restructuring of the debt.
Yeah. You know, one interesting aspect of this, and I don't know whether, Lotus, you had experience in Latin America on this, but at one point, if I remember vaguely, with the debt going at such a big discount, for example, now with Sri Lanka, 40-50% discount, some of these donors said, why don't we buy the debt at a discount and eliminate it that way? And then stretch out the payments. It'd be interesting to see if that happens, because I know there's some big players out there who would probably like to get their hands on this debt.
Yeah, no doubt. No doubt.
Yeah, and also, as we discussed before the webinar, China often likes to take assets. So let's say you cannot pay for the highway, I'll be managing the highway for the next 20 years. And okay, the proceedings from the handling of the highway will be to pay the debt. So the question is, will China be part of the common negotiations? Will they be common negotiations? In the debt crisis in Latin America, what happened, the famous Brady bonds that were negotiated with the IMF, World Bank, and Bill Rhodes went and negotiated, the famous Citibank guy went and negotiated, and that was easy. Now we have many different actors, some completely new. Dean Karolyi mentioned also the Asian Infrastructure Bank. You, Dr. Mobius, mentioned the Asian Development Bank. These guys have not been negotiating together, and of course, the Japanese and the Chinese government and BlackRock that also owns. So will they all be able to sit in the table together? Will they able to have similar goals? So we may see, and of course, the last debt crisis in Asia was in 97, 98. So more than 22 years ago. So then completely different right now, new actors. And that's why makes, besides the tremendous hardship for Sri Lankans, that makes the case very interesting because will be a precedent for next crisis that hopefully won't come soon.
Yes.
Yeah, just building off on that point, Dr. Casanova, and especially about how in the past, China has been one to seize assets rather than want to be repaid back. India has recently extended a line of credit to Sri Lanka, and traditionally, India and China have often been in land disputes and have had some tumultuous relationships regarding territories. Sri Lanka, parts of Sri Lanka, and parts of the Indian Ocean surrounding Sri Lanka being one of them. So I guess the next question is, what will India's role be moving forward, specifically with not just their line of credit, but also with negotiating terms with China if China is going to be involved in negotiations of their debt restructuring?
Andrew, let me just say a few comments on that. I mean, obviously, there is a competition between India and China in this regard. With the building of two ports now, you know, the Chinese built a port in the south, in the Rajasthan area, which they now have taken over because the debt could not be paid on that port. And then they have the container port in Colombo, which they also are running. This is, from the Indian point of view, somewhat dangerous from a strategic point of view for the Indians. So I think they are going to be very, very much involved to ensure that their strategic interests are protected in Sri Lanka. And you must remember that the relationship is very, very close, obviously. In fact, if you know the Ramayana story, the escape of the couple is to Sri Lanka. So there's a very, very close cultural relationship there. And by the way, someone told me that if you go to Tamil Nadu, you can walk across to Sri Lanka on low tide. I don't know whether that's true, but that's the kind of relationship they have. So I think the Indians are going to be much more active now, given the current scenario.
I think they have to, Mark. I think they're behind. I think the Chinese have initiated this Belt and Road through the AIIB and presented themselves to many, many countries, including Sri Lanka, over the last 10 years. And this historical cultural connection between India, and not to mention the strategic interests, means that India needs to work probably twice as hard to catch up. And their economic and political interests are too much center square for them in all of this. Isn't it interesting, Mark, from our studies of the last 3 decades in the investment world, just how much cultural ties matter to understanding capital flows, direct and portfolio flows all around the world. It's just fascinating to me as a scholar in the study of. So these historical legacy traditions of connectiveness between India and Sri Lanka undoubtedly have to play a role that in terms of driving capital flows. They just are so deep seated, and this is all around the world, by the way. These cultural connections are indisputable.
They're very important. Absolutely, yes. It's interesting if you just look at Colombo and the hotels in Colombo, you'll see the Indians are very much involved. There are a number of hotels that have been new hotels built by the Indians in the last few years. So yes, their presence, I think, is going to increase.
Yeah. At the same time, when I teach to Indian executives, what is interesting, I asked Indians, what is your natural market? And of course, they have a number of borders that are disputed borders with both China, Pakistan. So India needs to define what is its natural market. And of course, in the south, as you are saying, in Sri Lanka has received so many investments from China that was putting into question this traditional, very close relation to India. So definitely, as you are saying, Andrew, India needs to, in this very difficult crisis, to reconnect with Sri Lanka, because needs to make Bangladesh is also an ally of India, but needs to reorganize the way the India established itself as its natural market. That is very complex because they don't get along with the neighbors, which is a very difficult situation.
So by the way, the port, I was mentioning the container port in Colombo. The reason why that was built is because Colombo has a very deep harbor where the large, giant container ships can come, and they use that as a base to send smaller ships to the Indian ports that don't have deep water harbors. Mm-hmm. So again, that shows you the relationship is there. There's no question about it. Strategically.
One thing we haven't talked about, I don't know if Bill and Robin, you were going to go there next, but and I don't know if I'm seeing much in the conversation out there among the investment community, which is not just the study of this event unto itself, but the potential knock-on effects of this. And I know many in our audience, undoubtedly, as interested as they are in the nuances of this case study of Sri Lanka and its failure to meet its debt servicing obligations, to think about the fact that there are these foundational forces at work, coming out of the pandemic that are global. The rising fuel costs, the rising food prices, supply chain disruptions, geopolitical uncertainty that's sort of pervasive. And it's those are the sort of the fundamental sort of antecedents leading into this crisis. Yes, there are other political angles that are unique to Sri Lanka, but undoubtedly many investors are thinking about the knock-on effects. Tons of research in this area. I've contributed probably about 10 years worth in my own research career on the study of international financial contagion. I know it's real. Mark, as an investment expert, I know you must think about these things as a sort of a representative of those who are watching from the outside. Thoughts or reactions?
Oh, there's no question. It's contagion. Let's think about my fund, the funds that we run. Of course, the markets are all down, and there's an opportunity to buy cheaper stocks in the places where we already are. So why go to Sri Lanka? See, this is contagion in the sense that, hey, if the markets around the world were all booming and Sri Lanka was down, then of course there'd be a reason to go to Sri Lanka. But if all markets are down, of course, there's contagion in the sense that no reason to be in Sri Lanka. So that's a very good point. But on the other side, the other interesting point is, John Keel's in this development I was talking about, have a tower, an office tower. That office tower was taken by one Indian company that does software development. And they found that they could hire Sri Lankan software engineers at a very, very much lower price than in India or other places around the world. That to me is an interesting aspect of contagion in the sense that where you see problems in one area where prices are going up in India for software engineers, then you move into another area and you have beneficial contagion, so to speak.
Right.
So that would be another interesting development going forward.
So here's what I would be doing if I was at one of these funds looking actively at the region or just the emerging market space in general, is I'd be looking for common attributes about this credit-fueled boom, which we experienced in the run-up to about 2021 through 2021, and which we've seen now bust in Sri Lanka, both on the debt side, with it's trading at 40 cents on the dollar, its sovereign debt. Its markets are down about 40% relative to its peak at the end of 21. And we can see that there was a significant run-up in government debt per capita. I'm just looking for the sort of the common attributes of others in the region that look kind of like this as the possible next credit-fueled booms that will induce a bust and sort of will catalyze from one to the other. I'm looking at, stagnant GDP per capita, significant burst in inflation numbers in 2021, 22. We're looking at 17.61% according to the IMF WEO for 22 is the projected inflation. I'd be looking at a significant jump in gross debt per capita in these countries. That's what I'd be looking at. Current account imbalances, deficits that have sort of expanded. I'd look for these common attributes. I'm not saying this is going to happen, but I'd be, as an investor, cautiously watching for the possible knock-on effects with common attributes among others that are looking kind of like that.
No question.
Yeah.
Very good point. Yeah.
Yeah, that was awesome. Thank you so much. Building off on that question, recently a lot of private credit institutions have raised massive funds that are Asia focused, and given Sri Lanka's default and a lot of economic turmoil in that region, which stakeholders within the investment community do you think are well positioned to actually benefit from the situation in Sri Lanka?
Probably hedge funds, don't you think, Andrew? Hedge funds.
Oh yeah.
Would be very appropriate. They've got the money. They were willing to take the risks. And by the way, what Andrew was saying about allowing flows to come in and out is very important, because one of the problems is that you face when you're going into a country like this. You have a custodian bank, okay, and you say, okay, Mr. Custodian Bank, Northern Trust or whoever it is, I want to put 200 million in Sri Lanka. And they say, wait a minute, we're not sure we can safeguard these assets. So this is another aspect, and what Andrew was talking about, so important that you establish the mechanism which makes it easy for people to come in and out, because then you're going to get flows coming in.
Yeah.
The hedge funds.
I agree with you, Mark. I think the private actors can be the saving grace here. I know it sounds strange because we're talking about the central banks and we're talking about the multilateral organizations being such important people sitting at the table, but I think the private actors could be the saving grace here for this country, especially at this time. Just a little advertisement. There's a new working paper that I have with my colleague David Ng over in the Dyson School, as well as Wei Zhao, who's at Rutgers, where we're actually looking at not hedge funds. Hedge funds definitely would be any player that has a solid base of capital that is ready to take an active posture to play the contrarian on this dimension, especially given sort of the optimistic tone that Mark and I have sort of framed here for Sri Lanka. There are many mutual funds, international mandate mutual funds, just like Mark's former employer at Franklin Templeton. They have a number of these active posture mutual funds that are working on sort of country rotation-based strategies, country neutral, country rotation strategies. I could see this being a really interesting opportunity for them to take advantage of. A beaten down equity market with a double whammy of a beaten down rupee. It would be a wonderful, if you had the intestinal fortitude to go for it, and there are those that do, it would be a wonderful opportunity as a private actor to step up to the counter.
Exactly. Yeah.
Please, we have time, I think, for one last question.
Yeah, sure. I mean, I think a pretty quick one to close us out, but as we kind of look at all of the factors that led Sri Lanka to where it is today, dwindling foreign currency reserves, inflation, high leverage, what are some other potential countries in the region that the international community needs to look at and perhaps engage with as to look at Sri Lanka as a cautionary tale? Yeah,
I would say right away, Bill, Pakistan. Pakistan has got so many common elements of it, from a characteristics and attributes, the things I was talking about at the top that were featured in my book. So many common, interesting attributes in Pakistan, and certainly the political constraints that bind a country like Pakistan similarly bind a country like Sri Lanka. I know no comparison is perfect, but that one would be, if I were in this space, that would be where my mind would go right away, particularly the recent turnover in leadership there. Mark?
I agree to that. I can't think of any other that I would point to, but Pakistan is an obvious candidate. Yes, I agree with that. Yeah.
Okay, so I think we have come to the end of this webinar. We should not forget also the hardships of common people, how poverty goes up in these very difficult circumstances. Also, how middle classes disappear. So that is, as we speak, happening in Sri Lanka. And as you are saying, the possible contagion, and of course, Pakistan as well, an oil importing country. So oil importing countries are the ones that are mostly at risk. Those that are exporting is a bonanza, because in general, very complex to define the issue, but when you export, you can get foreign currency, and with the oil and gas prices so high, this is a very good moment, definitely, for Middle East and many other countries in Africa and in Latin America. Right now, they are having a boom because of the high commodity prices, but those that need to import are having a lot of problems. So hopefully we remember ourselves of the situation of the social challenges that normal Sri Lankans are experiencing right now. And we hope, as you said, Mark, for a very quick resolution in 2-3 years. Tourism, you think, can restart very soon. So thank you very much, Dr. Mobius, Dean Andrew Karolyi. You were both very brave, because you talked about a subject that we all are speculating a little bit with the information we have, with the frameworks, with the research, previous research. We hope that this one is contained by itself and is solved in 2-3 years, but of course adds to the normal, very uncertain times and very volatile that we are living. Thank you very much, both EMI fellows, Bill and Montgomery and Ravin Nanda. Best of luck in you will be living through this turmoil and this uncertainty through your internships this summer. So you will come back knowing more. So with that, we are closing the webinars of EMI in collaboration with Cornell 2021-2022, back in the fall with more, because so many things are happening. So we have plenty of subjects in the pipeline, and obviously this one hopefully solved by then, or negotiations underway to be solved. Thank you very much. Also the eCornell team, a great partner, because you run everything so smoothly, and very grateful, Chris, Kaitlyn, Nicholas, and all your team. Thank you all, and have a great summer.
Have a great summer. Thank you, everybody.
Thank you.
Thank you very much.